This is probably the most valuable TradingView indicator ever. It is over a 70% win rate in the backtest, and this is also a non-repainting indicator. Even better, when fully backtested, it managed to make over 730% profit on our account. So today we will be going over the most complex, but at the same time, the smartest TradingView indicator I have ever come across. In this video, I will explain what polynomial regression actually means and how you can become a better trader by using polynomial regressions to predict the future of the price of an asset. Please leave a like, subscribe, and turn on those notifications, as this will be a mind-blowing and interesting video for any retail trader. Now, to start the video, we will first understand what a polynomial regression actually is. In some sense, it is the same as a linear regression. If you don't know what a linear regression is, don't worry, let me explain it to you. A linear regression in its most basic form consists of three lines that form a channel. The middle line is called the linear regression line, the upper channel line is this line right here, and lastly our lower channel line is this line. So if you look at it in its most simple basic form, the linear regression line is actually just the average of the price action. Now what's great about the linear regression line is that it will show you the trend that the market is currently in. Now what's great about the linear regression line is that it will show you the trend direction. If the line is horizontal, it means that the market is moving sideways. If the line is leaning to the upside, then we're in an uptrend. And if the line is leaning downwards, then we are in a downtrend. If the standard deviation isn't something that you still know the meaning of, there's no need to worry. The only and probably most important thing you need to know is that the lines are calculated so that most or around 68% of the price action will fall between them. So whenever the price is above or below the linear regression lines, you can assume that the market is oversold or overbought, just the same as an RSI indicator. So now that you have a clear understanding of what the linear regression channel is, let's now dive into what the polynomial regression bands are and how you can use them to make insane profits. In a simple linear regression, we predict the value of variable y based on another variable x. So x is the independent variable and y is the dependent variable, because y is dependent on x, but x isn't dependent on y. I know this may sound confusing and as if it has nothing to do with trading, but I do promise that if you keep watching, you will thank yourself. To simplify, let's use an equation. So y equals mx plus b, or we can convert this into a practice example. Profit equals m times years of experience plus b. So in this case, a polynomial regression formula will model the relationship between the independent variable x as a dependent variable y as an nth degree polynomial in x. So let's now circle back to our trading strategies and indicators. Let's say that the profit we make trading versus the number of years of experience would look something like a curved line on a chart. If we used linear regression, the line would be straight and diagonal. However, this results in a terrible fit. However, by using a polynomial equation, we will get a much better fit. So that is the difference between polynomial and linear regression, and I hope I have helped you better understand. Now that we've gotten that all out of the way, let's set up our TradingView chart and start entering positions. So first head over to TradingView.com and now choose an asset that you'd like to trade on. For the sake of this video, I will be using the BTC versus the USDT pair. However, this indicator can be used on any asset or pair as long as there is enough liquidity and volume. Now that we have chosen an asset, we're going to be changing our time frame to 5 minutes. But like I did say previously, this strategy can work on pretty much any time frame. That's all we need to do to configure our chart. We will now be adding our indicators. Navigate to the Indicators search tab and search for the Polynomial Regression Bands by Donovan Wall. This is the only indicator we'll be adding right now. The indicator can be used in many different ways, and there really isn't a right or wrong way when using this indicator. However, for the sake of the video, I created a simple strategy to show you the potential that this indicator actually has. Now for the trading strategy that I'm going to be showing you today, we actually need to come across to our indicators tab and add one more indicator. And for this, you're just going to be searching for the ADX or the average directional index. We will be keeping the ADX indicator settings the same. However, we will be changing the polynomial regression indicator settings for this strategy. So come over to it and double click on it. And in the input section, we're going to be changing our data smoothing period from 10 to 200. And that's all we need to change for this indicator. Finally, we need to actually add a horizontal line on our ADX indicator sitting at our 30 level. That's all that we need to do for this strategy. Now let me show you when to enter into a position according to this strategy. Let's first take a look at when to enter into a buy position. First, the price needs to cross back above our lower band. Secondly, we will be using our ADX indicator as confirmation. The ADX will need to have recently been positioned above our 30 line. This means that the market volatility is high, indicating that we are currently in a trending market. Now we will enter into a buy position on the close of our trigger candlestick back inside our band. Our stop loss will be set at our most recent swing low. We will either put the take profit at our most recent swing high, or you can take profit when the price reaches the upper band again. As you can see, this trade was definitely profitable. Now let's take a look when we would enter into a sell position. First, the price action needs to cross back under our upper band. Second, we will be using our ADX indicator as confirmation. The ADX will have to have recently been positioned above our 30 line. This means that the market volatility is high, indicating that we are currently in a trending market. Now we will enter into a sell position on the close of our trigger candlestick. We'll be bringing our stop loss there up towards our most recent swing high. And for the take profit target, you can either target your most recent swing low, or you can target your lower band. As you can see, we managed to get another profitable trade. Now let's get into the backtesting to find out the real metrics behind it. Alright, the backtesting is complete, and here are the results. So we actually managed to return a 74% win rate after those 100 setups. Those 100 trades managed to return us 733% profit on our account, and it only took 3 months to find those. The profit factor for this strategy is 6.21, and we had 5 consecutive wins against 3 consecutive losses. So overall, I would say that this strategy is fairly solid. You should definitely try it out yourself, backtest it, forward test it with some paper money, and if you have any questions about this, please ask down in the comments section below. If you enjoyed, please leave a like, comment, subscribe, and turn on those notifications so you don't miss out. I love you all. Peace.